Hey guys, welcome back. You're still tuned into Trading Hour, and let's now talk about the real estate space now. A recent report by Knight Frank suggests that PE investments into Indian real estate sector seem to have declined 20%. This is in H1 of 2023, and they've stood at $2.6 billion. To discuss this, how overall demand is really looking, as well as, how you can look at the stocks within this space, we are joined by Vivek Rathi, who's Director Research at Knight Frank India, as well as Parvez Akhtar Qazi, Executive Director at the Novama Group. Gentlemen, thanks a lot for joining us today. This is Pavitra. Vivek, if I can come to you first on this, you've mentioned that there's been a 20% drop in the PE investments into real estate. Could you, break that down a little bit? Where are you really seeing this drop come through? And, are there still some pockets which are holding extremely steady?
So, in terms of our assessment on the capital market space, particularly these institutional investment numbers that we're talking about, there's been a 20% decline. We recorded about 2.6 billion US dollars of investments in the first half of this year. The most of the investments here have come into the office sector, which is followed by the warehousing sector. What clearly, in the backdrop of these numbers is the performance of these different segments in the real estate sector, whether it is the commercial office space, warehousing, retail, or residential. And on one hand, even while you see a great set of performances coming in by the residential sector, warehousing sector, and even on the office sector in terms of the occupier or the end user demand, but in terms of investments which are largely influenced by foreign capital, is where we've seen some amount of breather in this particular year.
I think corporates asking employees to come back to work is also getting reflected in the kind of PE investments and the deals that we are seeing in the office space. So, office real estate has really been booming over the last couple of months. Vivek, can you tell us about the valuations of the deals which have been done in the first half of the year for the various three segments, office, warehousing and residential, and how would the valuations compare with what we had a year ago or 3 years ago? Are we also seeing an uptick in valuations, and if yes, where?
So if I have to talk about the capital values in context of the office sector, warehousing sector, and say the residential sector, which are largely lease on the annuity assets for most institutional investors, the values have largely increased in case of say warehousing and retail segments, and in case of office segments, it has remained steady or only a marginal increase. Now, what is happening is in the Western markets of the Americas region or Europe, we've seen a lot of pressure in case of office sector, which is reflecting on many investment vehicles there, whether it is the REITs or private funds and office spaces. But when it comes to India, there has been great amount of resilience which has been seen. So even while there has been kind of stable pricing for these assets, and rentals levels have also stayed steady with about 20% decline in the total number of investments, but we still identify it as a resilient performance.
Vivek, let's talk about the second half, because I think you folks at Knight Frank, you have an expectation that for the year as a whole, I think you are expecting overall private equity investment in real estate to go up by just under 6%. So what makes you confident that the overall quantum of investment will actually increase year on year in the second half? And what are the trends you're anticipating? Do you expect more deals again in office? Will that be the dominant space? What about warehousing or residential or retail? I mean, retail was a complete lull in the first half. So leave us with a kind of a look ahead into what's the activity you're expecting in H2.
So if you see the numbers, $2.6 billion which have come in, office sector has continued to attract almost 65-70% of this money, despite all of the challenges which largely emanate from the client markets in the West. In the underlying numbers for the office space demand, which is occupancy led transactions that we are seeing, even in the latest quarter, which is Q2, we are seeing steady demand from corporates who are taking up spaces. What we are expecting is companies which have an intention to build delivery centers in India and companies which are serving India facing demand, India facing businesses which are based on the domestic demand potential will continue to go ahead with their intentions to take up space. There could be some delay because many of these decisions are taken overseas, but building in flexibility in their occupancy plans is how these corporates will go ahead in terms of taking up spaces. So we are expecting the office space demand, the underlying demand for office assets from the occupiers to largely remain the same as last year. And on back of it, we're expecting the investment flow also to improve as the interest rate environment improves both in the US and in the country here.
Sure.
And all of the challenges, with all of some of these challenges settling towards the end of this year is when we see these investors to become again active.
Okay, got that. Thanks, Vivek, for sharing the highlights of the report and also, a bit of a, view into what lies ahead in the second half. I just want to contrast this for the viewers. I mean, the rally in perspective. Real estate has had a fantastic run in 2023. I'm talking about the stocks now, not just the underlying assets. Let's pull up the two charts, the Nifty and the Nifty Realty Index. So look at the outperformance there. That the orange line is the Nifty Realty Index. 22-23% near for that index versus about 5-6% for the Nifty. Parvez, hi, thank you for joining in and patiently listening in. Now the harder question to you, given the run up in stock prices and the elevated market sentiment, the question is where can people still invest when we were talking about real estate stocks? Tell us about the companies that you still think offer value and tell us about valuations of realty stocks now.
Hi, good morning. So as far as real estate stock investment is concerned, we continue to remain bullish on the housing space. We believe the residential market is on an upcycle, which is likely to remain there for at least next 4 to 5 years. It is no surprise how Nifty Realty has performed. In fact, if you look at last 2 years or so, most of the housing companies have performed really well. Last year was a bit of challenge, largely because of interest rates rising. Now, with that largely stabilizing, even that concern has gone away from the investors' mind, and which is the reason behind the strong performance of Nifty Real Estate. As far as listed stocks are concerned, we expect most of them will deliver at least 25 to 30% kind of pre-sales growth in FY24. And therefore, you should continue to see the rally in housing stocks going ahead as well. As far as your second question about valuation is concerned, we are largely in line with the last 10 years average. So from a value, maybe there's not really an immediate trigger. But as I said, operationally, you should see a 25-30% kind of pre-sales growth for the next couple of years. And maybe there lies a valuation trigger in which is maybe some way down the line. But yeah, I mean, maybe 1 year down the line when you see maybe interest rates falling, that could be a further potential re-rating trigger for the sector.
All right, got that. Parvez, I was looking at your report and you have mentioned on the launches that we saw a bit of a decline in May. Can you tell us, is that, for May alone, and is that expected to pick up in the months to come?
Yes, definitely so. If you look at most of the listed developers, or in fact organized developers, or what we call tier 1 developers, our launches were heavily concentrated towards the second half of FY23. So it was expected that the first half of FY24 is likely to see a lull. We expect launches to pick up going ahead around the festive season. Definitely FY24 launches should be higher than FY23 considering the strong sentiment in the housing space.
All right, very quickly before we let you go, could you just leave us with your top 3 picks of the real estate pack?
So we continue to prefer DLF, which is our topic in the housing space. That is followed by Lodha and Brigade Enterprises. These are 3 companies you could say which broadly cover the NCR, Mumbai and the Bangalore market on which we are positive.
We'll leave the discussion here. Thank you very much for joining in. Get into a break. On the other side, we'll get you excerpts from our exclusive conversation with the Minister of State for IT and Electronics, Rajiv Chandrasekhar. Stay tuned.